In today's video, we're going to talk about how purchase returns and allowances are treated in both the perpetual and periodic inventory method. If you're not sure what a purchase return and allowance is, stick around because we're going to describe that for you and show exactly how to do the journal entries. But first, I want to say that I believe something great is going to happen for you today. If you're someone who has trouble keeping track of the differences between the perpetual and periodic inventory methods, or give this video a thumbs up. That way I'll know to create more of them for you to help you better understand the differences. All right, what is a purchase return and allowance? Well, that is where a company purchases merchandise or goods from their supplier, and for whatever reason, it may not be up to standards. So a purchaser may be dissatisfied with the merchandise received because the goods are either damaged or defective, inferior in quality, or do not meet the purchaser's specifications. In such cases, the purchaser may return the goods to the seller for credit if the sale is made on credit, or for a cash refund if the purchase was for cash. That's known as a purchase return. Alternatively, the purchaser may choose to keep the merchandise if the seller is willing to grant the purchaser an allowance or some sort of deduction from the purchase price. That type of transaction is known as a purchase allowance. So we're going to kind of combine those both here in this journal entry because they are treated the same for purposes of the perpetual and periodic inventory methods. By the way, if you like this kind of material and would like to get some updates and other things that I've got going on, sign up for my free email newsletter at askprofessorcapko.com. Thank you. In this case, we're going to say that the company returned to its supplier $300 worth of goods it purchased, and in this case, it purchased it to resell it because it did not meet the company's specifications. Now, if you missed my prior video in which I journalized the transaction in which the purchase was made, I've got that linked up here for you. Take a look at that. In the perpetual inventory method, we're going to, of course, first of all, we're going to debit the accounts payable. For the $300, and we're debiting it because if you recall, accounts payable is a liability account. They owe the money, so it would be normally increased by credits, but in this case, they are reducing the amount of money they owe because they are returning a $300 worth of goods. So we're going to reduce it by debiting accounts payable. We're going to credit inventory for that same $300 because we're going to take it out of inventory, which is an asset account, which normally would be increased by debits. So we're going to decrease the asset account by crediting it because we don't have that anymore. And remember, we're talking about the purchase price that the company paid for the inventory. We're not talking about the sales price that they would be selling it to their customers. And now you have fully accounted for the purchase return and allowance in the perpetual inventory method. Let's now talk about periodic inventory. In the periodic inventory system, it's going to be treated a little differently. First of all, we're still going to debit accounts payable because we're reducing the amount that is owed by that same $300. But instead of crediting inventory, we have a temporary account in the periodic inventory method, and you'll notice there's a lot of temporary accounts in the periodic inventory method, and that one is called purchase returns and allowances. And so we're going to credit that one for $300. And now you have fully accounted for the purchases, returns, and allowances in the periodic inventory method. And now you know the differences of how purchase returns and allowances are treated in both the perpetual and periodic inventory methods. However, there's a lot more you're going to need to know, so don't forget to subscribe to my channel and click that notification bell so you never miss a video. Thank you.